Hi guys, this is Shiva. Welcome to Trademark. Today's our topic is it's very important and amazing thing, that is Fibonacci retracement. In this video I will cover Fibonacci retracement. Next video I will make Fibonacci projections. Let's start with basic. Fibonacci series discovered by Leonardo Fibonacci in the 12th century, and it was discovered in the year 1202 and first introduced to Western world in the book called Liber Abaci. And Leonardo Fibonacci was an Italian mathematician, forms and Republic of Pisa. 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, so on so forth. These are all Fibonacci numbers. Let's see the logic behind this series. 0 and 1 are the very basic Fibonacci numbers. So how does we get these numbers? Let's see. Just add current number with previous number, like 0 plus 1 is equal to 1, 1 plus 1 is equal to 2, 1 plus 2 is equal to 3, 2 plus 3 is equal to 5, 3 plus 5 is equal to 8, 5 plus 8 is equal to 13. Then it will keep on going. I hope you understood how Fibonacci numbers are formed. Believe it or not, this Fibonacci series comes very much in natural sequence like seed heads. This Fibonacci number found in seed heads. The head of the flower is also subject to Fibonacci process. The total tends to match a Fibonacci number. The Fibonacci sequence can also be seen in the way tree branches forms, in spherical galaxies, flower petals, in human body. Majority of nature follows Fibonacci series. I know it's very hard to believe, but yes, that's how Fibonacci number sequence can be found in nature as well. And there were many people said that if it is found in nature, then why can't this same logic be followed in stock market? So same logic brought into the stock market to calculate the retracement levels. Retracement means I already made a video on types of trends in stock market. In that I explained uptrend, sideways trend and downtrend. In that I said how retracements were formed. Okay, I will give quick revision. We know that market never moves straight line like 90 degrees or 100 degrees. Market are always moves in a zigzag manner. Market moves in a zigzag manner like trending move. Next we get retracement. Next trending move. Next we get retracement. We can call this part as a retracement or pullback or non-trending direction or corrective move. Okay, now you get clarity about retracement and how it forms. Next, let's see what is golden ratio. It is a mathematical formula which gives us particular percentage to find out support and resistance in the market. Just take any random number in Fibonacci series. Take 13 and divide it with previous to that number. Previous to 13 is 21. 13 divided by 21, we get 0.618. Next, take same 13 and divided with previous back number. Back to that 13 is 8. 13 divided by 8 is 1.618. This is the golden ratio, 0.618 and 1.618. Take any number, 21 divided by 34 is equal to 0.618. 21 divided by 13, 1.618. Next, let's check ratios. 1 divided by 2 is equal to 0.50. First ratio we get 0.50. Let's see other ratios. Next we divide 3 divided by 5, we get 0.618. 5 divided by 8, we get 0.618. 8 divided by 13, we get 0.618. And next ratio is skip one number and divided with previous to that number. We get 0.38. 3 divided by 8, it is 0.38. 8 divided by 12, it is 0.38. 12 divided by 55, we get 0.38. And last one is skip two numbers and divided with previous number. We get 0.23%. Lowest number. 3 divided by 13 is equal to 0.23. 13 divided by 55, 0.23. 0.23%, 0.38%, 0.50%, 0.61%. These are all ratios. Only 0.618 is golden ratio. What about other ratios? Other ratios like 0.23, 0.38 and 0.50. These ratios are also part of golden ratio. Okay, first we understood about retracement. Second, we know about how Fibonacci series forms. Third, we understood how Fibonacci ratios we get. Next, let's see how to use Fibonacci ratios. By using Fibonacci ratios, we can find out support and resistance. How? Let's see. Okay, we already know that market never goes straight line. This is an uptrend, this is a trending move, this is a retracement. So, in this uptrend, if we need to enter, then where is the correct entry? Correct entry is at retracement level. Just calculate or simple calculate with Fibonacci retracement. It's become simple because we learned about Fibonacci series and ratios. After applying Fibonacci retracement, we get these levels 23%, 38% and 50% and 61%. When price retrace any of these levels and gave confirmation, after confirmation only we should enter, no blind entry. When price retrace any of these levels and gave confirmation, then only we can take entry. And one more important point, once 68% level breaks, then it is not called as retracement, it will be reversal signal. Very important point. In downtrend also same thing applies like this. Let's go to live chart and see some examples. Let's go to TradingView software. I like this software because it's very friendly and suits me, and it is freely available. Go to Nifty full future chart. This part is wick or shadow we can call. This part is body. Apply Fibonacci retracement. Last swing to top. It need to touch wick to wick or body to body. Here 50% act as a support, then moves up. This is clear uptrend. Here it is 68% retracement and bounce. Here market supports at 38%, then moves up. When it came to 38%, market respect to that level, then moves up. Let's draw in downtrend. Here it is 50% act as a resistance and fall. The more you see the charts, the more you understand the market. Okay, it's time up. Believe in Fibonacci, then only it will start working. Fibonacci is an amazing concept. Fibonacci is amazing. Belief is amazing plus. Good to see you in next video.